Good evening, everyone, and welcome back to Market Analysis from eurusd.com. I hope you are well, and I hope you are getting ready for the next trading week as well. We had a very nice week last week, since all our trades were with our expected trend. We will get started as usual with the dollar index. As we know, and as I have shown you from the last week, we are in a bullish trend for the dollar index, and we are correcting to the downside. We are moving correctively to the downside and impulsively to the upside. So our main trend for the dollar index is bullish. We have this triangle. We have talked about this triangle in the last week, and the market, the dollar index is still entrapped within this triangle. So we are expecting the movement to the upside to 98.50 or 40 area. To remind you, this is the correct count for the dollar index. We have 1, 2, 3, A, B, C, D, and E. So the market should break out to this area, but we did not see the breakout because we have a minimal change for this triangle. I will show you for the learning purposes how the corrective structures change from one to another. This depending on the market movement and traders' emotions and expectations. Last week, I told you this will be our triangle: A, B, C, D, and we had has ended right there. But we have a minimal change in the triangle, like this: A, B, C. This is whole E, D, and this is wave E. This is minimal change. This keeping the uptrend intact. So wave E is right there for the new change for the dollar index. So price is expecting to move in any moment to the upside. We have multiple entry points for the dollar index. As you know, it is very important to have a proper entry point for any market. Knowing the trend of the market is not enough. You have to enter or to find a safe entry point for your trade. We have multiple entry points actually represented by this corrective flag, and as told you from the last videos, usually corrective structures are repeatable in the same market. So this is ABC for different markets are repeatable and represent our entry points. Like this one, ABC, you can enter right there. ABC, you can enter right there. ABC, enter right there. ABC, ABC. So we are waiting for the breakout to the upside. For those people who are trading classically and liking the classical chart patterns, we have a very nice ascending continuation triangle right there. This is represented by these bottoms. As you see, these bottoms, as you see, these are you have higher lows right there, where you have nearly the same level highs right there. So 90% of these ascending continuation triangle break up and is named as continuation patterns. Let me move to next market. I'll show you the gold. Actually, we are bearish for gold from the previous week, and the market has not moved that big value for in the last week, but we are still bearish, waiting for our target for this area. As shown you in the previous week, we have ABC to the upside, then we have a corrective structure ABC, and we have to complete the whole corrective structure in an area right there. This whole structure is named as expanded flat. We have to complete this expanded flat right there. So our target for the gold is around 1,190. You can go to lower time frames to find the proper entry points for your trade. We have sent you some. Sent you by the Telegram channel. This is my Telegram channel, Elliott Signals. I have sent you some entry points for some markets. You can follow me right there to find proper entry points in the proper time. To get the proper entry point, this is entry point for Uzi. This is crude oil. This is the entry point for the euro. This was dollar index. This is the pound, entry point for the pound, and this is entry point for the gold. It was around 1,246 area, and we have the breakout out of this flat. We had this breakout on, I think, on Friday. Okay, let me move to crude oil. Crude oil, we have executed 2 trades in the last week, because we have to be very careful for the crude oil, because it is moving in a sidewave movement, and as told you from the previous video, sidewave movement is very risky, and most of the accounts are blown out, and most of the losing trades are triggered at the sideways movements. So patience should be shown right there. We had 2 trades from the last week. We have sold the crude from this area, and we have closed at this area around 100 pips profit, and then we have bought the crude from this area, and I have exited this area at the break even, because once the price moves into your direction, you have to put your stop loss to the entry point and leave the trade run to your direction. And once the trade reversed, it hits my stop loss at my entry points. This is depends on your strategy you are using for your trades. Okay, for the next week, I told you we have crude oil is very risky. We have an impulse to the upside. We have an impulse to the upside. 1, 2, 3, 4, 5, and we have a triangle as corrective triangle, A, B, C, D, and E. So for discount, we are anticipating the price to move to around 55 area. 55 area. But this we have another count for at the moment for the crude oil, A, B, C, D, and E. So we have we might see the price falling to the downside. So how can we trade this market for the next week? For me, I will do the following thing for the crude oil. I will buy the crude oil from the current price and targeting 55 area. Okay, 55 area. I will put my stop loss at this place below this bottom, and I will put sell stop the same amount right there. I will put my sell stop order right there with a stop loss for the buy order. If if my stop loss is triggered with the order, I guarantee that I will have a large amount of profit right there. And if it is follow the first scenario, it will reach 55, and that's okay. So you have to have your own strategy for the trading in such markets, because it is very risky since it is moving in and sideways movement. It is vibrating the orders, the buy and sell orders. So we have to be very careful from this market. Let me move to the euro. As you see, euro is the reversal of the dollar index. We have discount A, B, C, D, and E for our triangle. So we are expecting the price to move to the downside, but we should be very careful. I shown you in my Telegram channel some entry points for the euro for the last week after exiting from this flag. This is a very nice entry point right there. Anyhow, we have to be careful that the same scenario that happened to the dollar index might occur right there for the euro. I show you that this is A, B, C. We might see we have D right there. Then we have E to the upside. So you have to be careful for this change in the triangle at any moment. But I don't think this will happen for the euro. So we are bearish for the euro, targeting around. This is our target for the euro. It is around the 1.1150. 1.1150. Let me move into the bound as you. Okay. As shown you in the previous weeks, we are targeting lower values for the bound. For me, I am targeting this area around around 21, 1.22, 1.22 to 23. So the price action will tell us the bottom for this market. For the USD, I have sent you the very nice entry point from this place to sell the USD on my Telegram channel. I have shown you this point to join the sellers to the downside. Yeah, as long as the price continued to make correction patterns, which are different, as you know, we have many correction patterns. You should master these correction patterns like zigzags, flats, triangles, pennants. You have to know all these correction continuation patterns so that you can join the market at any time. The USD is the Kiwi is the same. I have sent you this entry point to sell the euro from this area. We have sold the euro from this area. I sent the chart to my Telegram channel. For the Turkish lira actually the same analysis for every week. As you see, it is out of this descending wedge to the downside. We are expected this flag to happen. We expected this flag to happen, and we waited for this flag to be broken out. This flag, and we joined the buyers at this area, and we have another previous entry point right there. I think we use smaller time frames to enter after the breakout from this descending wedge. So we are anticipating the Turkish lira to move to the upside for higher values. Okay, let's move into the yen. The yen is we have sent you we gave you a signal last week, as you remember, from this area. We are targeting 115. We have entered from right there, and we are targeting 115.50. So we are still bullish for the yen. For the Swiss franc, we have entered before from this bottom. Actually, we have cashed this bottom, and I advised you to put your stop loss from the last video, if you remember, to put your stop loss right there. To put your stop loss right there, and to buy the Swiss franc from this targeting at least this area to this area. The Canadian dollar, the same thing. We have bought the Canadian dollar, and we are targeting 1.36. So we can join the after any corrective structure for the Canadian dollar to 1.36. This is our target. This is the Dow Jones. This is the Dow Jones. I will focus on this market because it is very risky markets, and a lot of people are losing money in this market because it is moving very fast. Actually, I have taken many trades for this market in the last weeks. I will show you my trades. First trade I have taken. I have missed all this movement. And after I saw this correction, I took my trade right there. And as you see, market is moving slowly to the downside, and I exited my trade after exiting from this channel at this area. Then I joined the buyers. Right there from this area. I joined the buyers from this area. I have exited my this order at this area. Then I went short. And exited. I remember at this area. I missed this whole movement. Then after seeing this reversal pattern, I entered long right there. I was targeting, I think, 26,000, but we did not see this number, and I exited after seeing this big gap for the market. Then I went short for this market to this bottom, to this area. Then I look for my trade for the last week. I was buying from this area and targeting higher areas, but the market reversed and hit my entry point at break even. This will be a change in the pattern, because as you see, we have a new pattern for this market. We have a new pattern for this market. Let me show you. This is very risky market. If you have a small account, you do not need to trade such markets. It is moving very fast, very risky. You need to find a very safe and perfect entry point to be able to minimize your losses. And I don't recommend scalpers to enter this market. I recommend only swing traders. For those people who is trading with the Elliott wave theory, they can join this market because it will give them a lot of money. But for those people, scalpers are looking for 15 or 100 pips, you can avoid these markets, because the least amount of the loss you can or the pips you can afford will be more than 200 to 300 pips. So you do not need this market if you have a small account or you are a scalper. So swing trading is the only choice. You can take the whole swing, so that this any loss, you would be able to afford any loss during trading. So for me, I have traded swings only, targeting large amount of swings, 6 to 1,000 pip for this market. And the trading for the next week, as we see, this is ABC. Then we have a corrective structure, very nice corrective structure, ABC, which seems to be complete. Then we this is the whole W, X. Then we have this leg A, B, C. Then we are targeting to around 23,000 area. So we for those traders who like to join the Dow Jones, they can go sell for 1,000 pips. As you see, you have to put your stop loss right there. So it is very risky. You can wait for any correction, enter after any correction. So the Dow Jones is in a bearish movement, and I expecting to see a leg similar to this leg, because as told you, corrective structures are repeatable within the same market. We have WXY. We have this leg to the downside. I will change the color. We have this leg to the downside, as well as we have this leg to the downside. Then we have ABC correction. Then we have ABC correction. So I am anticipating to see a leg similar to this leg, similar and equal in length actually to this leg. So I am expecting the market to go to around 23 or even to 22,500 area. So we still have a 1,000 or more 1,000 or more pips to the downside for this market. Today I will expand the analysis to some bound pairs. I will begin with the bound chief. about chief since because I will give you this analysis for this week because we see a very nice patterns right there. We have ABC to the upside. Then we have corrective expanded flat to the downside ABC. Where C 1, 2, 3, 4, 5. So the price has to move to this area. So you have about 700 pips to the upside. So you can buy the bound chief from the current price, targeting 700 pips to the downside to complete this expanded flat for the bound chief. Let me show you the euro yen. For the euro yen, we have this count ABC, which is W, ABC, which is X, ABC, which is Y. So we are about to see ABC. We might see a new low for the euro, and that's okay. W, X, Y. This is X, and then we will have Z to the upside. This is very clear for the euro yen. So we are bullish for the euro yen, at least to this previous bottom, at least to these bottoms, and we might exceed this bottom to the downside, and that's okay. Let me move to bound yen. The bound yen. Okay, let me zoom in. Okay, we have this correct for the bound yen. This piece of correction, as you see, this is ABC. This is which is W, A, B, and C to be completed at this bottom right there, and we might exceed. At most probably, we will go beyond this bottom to complete with W. This will be X. Then we will go to the upside to make the Y. So we can sell the bound yen to the area beyond the previous bottom. Let me move into bound CAD. Bound CAD actually is making very nice complex corrective structure. It is very nice showing the beauty of the analysis right there. We have A, B, C, which is W. This is X. This is A, B, C. So we are bullish for the bound CAD to see to exceed to the area exceeding this this high. WX, we should see Y at this area. That's all for this week, and I hope you make money and enjoy your trading week. It will be a very busy week since we have a very important news for the dollar. See you next week, and bye bye.